Yes, sir. What's up, everybody? How you doing out there? Welcome to another episode of Market Watch. I'm your boy Erik T. Jackson. That's your other boy, Eddie Chinea. How you doing, my brother?
What's good, man? Miami Heat's finest, baby. Since '88. You know what I mean? Not a we ain't bandwagons. I'm talking back when Rory Sparrow and John Sunvold played for the Heat, baby. I've been a Heat fan, so
Yes,
pulling for the
sir.
Heat. How you
Hey,
been?
keep it real, man. I've been great, man. Just hanging out with the kiddos and waiting on the summer to get here. You know what I'm
I'm with
saying?
you. I'm with you.
Yeah, my kiddos, my young ones, Bria and Ian, they playing basketball right now every Saturday morning. So I've been enjoying that. You know what I'm saying?
Always good to watch this play, man.
Bria been hooping, bro. Like, go
Good.
ahead, girl. Yeah, she was hooping. She getting
Exactly,
money
man. Let's not forget where she gets it from.
already, man. Already. Hey, I'm aggressive and I can rebound, and
Hey,
that's what
know
she
your role,
does.
baby. That's it. Hey, I tell her that all the time that she plays seventh grade basketball. Like, dude, go in there and do the dirty work. Fight
Yeah,
for the ball, lose balls, rebounds, box out,
you're
be
gonna keep
physical.
you
Don't
on the court. Absolutely,
come out on the
absolutely.
speed, man. Stay out of that paint.
Yeah. Hey, man, we got a good show for you guys today. We're gonna talk about uh, another bank collapse, bro.
Oof.
We're gonna talk about the Fed rate hike and what that's doing to the market. We'll talk about trading and investing, compound returns,
Oh,
and
yeah.
uh, we will get into the drip program and what that's all about. All right. So first up, bro, what's up with this bank collapse, man? Like it's another bank, man. Do,
Yeah,
do we
man.
do we need to
Everybody.
go back to putting our money under our mattress, man?
Let me tell you this, man. I personally don't know why there's been this big old run on banks. I know that people start fearing, and when fear subsides, starts to set in, start to pull their money out. I mean, I think it was First Republic, man, lost like
Yeah.
$100 billion in investor deposits.
Yeah.
The stock is down like 93% year to date, and at one point it was a recommended buy.
And these I know, right? This wasn't no little bank.
No, this was this was a big time bank. You know what I mean? One that, like I said, I mean, going back to, even when was it? January of this year was a
Uh-huh.
buy rating by Seeking Alpha's analyst, man. Buy rating about it 120, 117, right?
Yeah.
Got up there to 140, and then boy, man, it's trading now at 44 cents a share, man.
Ew. That's
In a
rough.
matter of like 2 months, from $144 a share down to 44 cents a share, man. So I don't know.
So
People start
people,
fearing this stuff. Especially now with these banks, you think that they've got all these high yield savings accounts. The Capital One, I just switched mine over with Capital One. They were paying me like 0.3%,
yeah.
and I just switched over to to 4.5.
Have you got the Apple savings account yet?
No, not yet, man. I'm an
I
Apple
haven't
fan, but
either.
I have not bought into to the Apple savings account yet.
It's a thought though. I'm still thinking about it. And I haven't done that
I
yet
mean,
either,
to pay
man.
4%, 4.5%. I mean, that
Yeah.
if nothing else, at least keeps up with inflation. You know what I mean?
Right, right. So with the bank collapsing, man. Uh
Hmm.
I know we had already talked about it a few weeks ago with the other banks collapsing, but uh it seems like, to me it felt like reading about it, it felt almost like a Ponzi scheme. And what this bank collapse seemed different than the first two to me. But what are your thoughts on why the banks continue collapsing and when will it end?
Man, when will it end? Who knows? I mean, I'd be lying if I told you one or the other. But
Yeah.
the problem is you get everybody. The banking industry is unsteady, man. And what I really worry about, aside from banks, falling out of the sky, seems like, is, they're the ones that, set the financials for, when you talk about the market and everything. So banks ain't doing well. I'm, afraid to see what happens with some of these earnings reports that are coming up, in Q2, for the simple fact that you got a lot of these banks that ain't going under. They're not investing those assets. So, you have other banks absorbing them, and, I don't know, man. It's crazy though to see like another banking crisis. You go back to 2008, 2009 when the real estate market burst. The bubble burst, and all the bad loans that were being put out there, man. And it seems like, they say history repeats itself, but this thing is echoing the failures of Silicon Valley Bank and Signature Bank.
Yeah.
You get depositors, investors that start pulling their money out, or they start selling their shares in droves. I'm talking about in high amounts. They're getting rid of their shares of stock and their money in other banks, and you can't keep up.
Yeah, and I mean, and it's scary, especially for people that already don't really trust big institutions. You know what I'm saying? There's plenty of people out there like that. So I was talking to somebody today, and they were telling me that, well, most people that had a lot of people that had their money in banks, it's going to be federally insured anyway, because most people aren't going to have over $250,000 in a bank account. But I was saying that may be true, but people still don't want to go through their bank collapsing. You know what I'm saying? I mean, because that's the situation. Yeah, you
shockwaves. You know what I mean?
Yeah.
Even if I know my money's insured, nonetheless, what's the timeline between them getting me, my insured deposit back to
exactly?
Paycheck to paycheck. I can't. I got $100 in my bank account. And I can't afford to lose that $100. You know what I mean?
Yeah. So exactly. If I have
anything, stay with the big bank and the Capital Ones. I don't know, man. I don't have an answer for everybody as far as banks to go to. And
my money was in Washington Mutual back in the day for like 10 years, and then Chase absorbed them, and so it didn't feel like a collapse. I guess it could be called a collapse now, but it didn't feel like one at the time. All of a sudden, the only thing I knew was that all my Washington Mutual banks have turned over to Chase. That's the only thing I knew. So, it didn't feel like a collapse. So I've been rocking with Chase ever since then. But I think I read somewhere where they do consider Washington Mutual having collapsed and being absorbed by Chase, JP Morgan. You know what I'm saying?
Yeah.
Shoot.
JP Morgan, Chase acquired First Republic.
Yeah. Yeah, they did. They got, and and that's something else that they mentioned. They said that all First Republic, banks are just going to become Chase banks, JP Morgan Chase banks. So it's sort of similar. They're not going to cease operations. They're just going to become Chase.
Just going to put a Chase logo on that thing.
That's it. Take the First Republic off and put a Chase logo on that thing.
Yeah, and keep it open. But again, sometimes maybe these banks get overextended as far as what they're doing. The loans they're putting out there, and sometimes it might not be a bad thing to get absorbed. But at 44 cents a share, well, I don't know what JP Morgan bought them at. Let me see if I can find that. But it couldn't have been much.
Right.
It's so here go the transaction details. JP Morgan Chase acquired a substantial majority of the assets, assumed certain liabilities of First Republic, $173 billion of loans, and $30 billion worth of securities.
Wow.
Didn't take on their corporate debt or preferred stock. They're going to make a payment of $10.6 to their SC. Oof.
Wow.
That's going to force JP Morgan, obviously, to have to bring the balance sheet. Well, 20, they're having to pay back repay $25 billion deposits.
Yeah. So, that's a lot of risk. Yeah, that JP Morgan is taking on.
Yeah.
But as far as but no, so So I was telling my friend that as far as trying to stifle the American public's panic regarding the banking system, there's probably a reason why the government is insuring a lot of these accounts that have more than $250,000, because they don't want there to be a big panic about putting your money in banks and stuff. What do you think about that?
I mean, there's when stuff like this, it's going to cause that panic. I don't know. Again, sticking with some of the bigger banks.
But if the government comes out and says, even though the FDIC insures accounts up to 250,000, we're gonna go ahead and insure, and they didn't say all, but they did say most of these other accounts. Does that make people go, "Whew, thank God," or do people be like, "I don't care"?
I guess that all depends also on their view of the government. You know what I mean? You know what I'm saying? Like some people are just like, anti-government and anti-big bank, anti-big, big business, big industrials. You know what I mean? Corporate America.
Yeah.
The fact that the government's talking about stepping in, I would say that America's not going broke. I mean, hell, unless they can't come to an agreement on this debt ceiling.
But that's something else that I wanted to get into, man. I think
this stuff is a lot for media. You know what I mean? What I mean? And stir up some stuff, and then it all gets worked out. But look, there can be anybody that is on Capitol right now that is that stubborn to where they're going to let America collapse. So they go arguing this, that, and the other. Eventually, they're going to get this thing worked out.
Yeah.
The mere fact, they go back to what you were saying. The government backing it, and I would think that would provide some sense of relief or calm. You know what I mean, over the masses as far as well, man. If this bank goes under, am I going to get paid? Am I not going to get paid? How do I know if I'm insured? I'm not insured. Well, the government comes in and says, "Hey, no, we got you guys. Don't worry about it."
Right.
How the government keeps having to bail these banks out, man. It's crazy.
So that's a question. So if America is at what? Is it how $3.5 trillion in debt? Is that it, or is it 35?
31.4, something like that, I thought, right?
Okay, so if America is what is the debt ceiling? Like, how high can it go before America crumbles?
Who knows, man? But right now, they're saying that they're at a break.
Yeah, that's a question that we need. That's a question for God right there.
Yeah, for real.
I'm not sure you and I can answer that one.
I'm not in those meetings. I have no idea what them jokes are talking about, what they're debating, why they're even upset with one another about this stuff. Like, do what we need to do to get this country back on its feet. COVID happened. Now you got banking crisis coming. I mean, it just seems like it's always something. I was talking to a student today, and he was learning about the S&P 500 and everything or something.
Okay.
I said, it's supposed to go up and down, right? Cyclical.
Yeah.
When I'll show him the chart, he's like, "Well, coach, how come what's going on here on all these charts where it's down, down, down?" You go back and you look, COVID, right? So this banking crisis. Go back and look at the previous drop, COVID. Right, prior to that, talking like the 2008, 2009, real estate bubble that pops, right? .com bubble, and it's almost as though these things are brought on into conspiracy theorists, but sometimes brought on purpose because we're starting to get to a point where there's a lot of money being flooded out there, so we got to find something other than just stopping Americans from spending or trying to tighten up Americans' money. Let's introduce this as like, oh my God, here's another scare. To bring the markets back down. I think the fear factor, what do they call it, instilling fear, like fascist. Is that what it is?
Yeah.
Fear.
Yeah.
The media doesn't help you, man. The media, anytime there's any kind of information or any kind of story, they're gonna make a bigger deal of it, than it really needs to be.
Right.
But First Republic, I'm reading here that the U.S. The SEC is apparently investigating whether any former executives at First Republic engaged in any insider trading before they got seized and sold to J.P. Morgan, man. So
really,
there's more to people just pulling their money out. Like I said, Silicon Valley Bank, losing how many billions of dollars in bonds, investment that they had.
Right.
And there's more to the story. There's always more to the story.
Yeah. So with banks, so their job is to loan your money out to people. That's how they make money, right? They loan people's money to other people, and they get
invest a little bit. Everything's kind of like like insurance.
And then they invest in the market, which can go up and down. So it's plenty of ways for banks to fail. Is my point.
Yeah, it overextended. Again, same like I said, 2008, 2009. They were all them subprime mortgages, man.
So let me ask you. So are chickens coming home to roost? So are they finally getting what was going to inevitably happen? Because this is just feels like it's happening way more than it has throughout history.
I think also there's a lot more money flowing through the markets too now. You know what I mean?
Yeah.
Look at those guys did with Wall Street bets in GameStop, man. So there's, when people start acting, as far as, collectively, right, the masses start coming together, who knows what's going to happen. So with all this money that's flooding in, and again, with more money, then obviously when things start to break down, more money's going to start flowing out.
Yeah.
So why it's happening more often, I think, again, we've talked about it before on the show, man. I think people, it's the greed. You talk about executives, right? Hey, we know that we're going to, if it comes out that there was executive first or insider trading, that, hey, we know it's about to tank. We're about to get bought out. Let's sell off all these shares right now, before it hits rock bottom.
Right, right.
Sometimes that greed sets in, man, and
Yeah. Yeah, I agree with that. And we can talk a lot more about these bank collapses, and who knows, there might be another one or two before the end of the year.
Wouldn't surprise me. I would not be shocked. I'll tell you that.
Yeah, absolutely. Absolutely. Let me give a shout out to my man, Mr. Night Wolf. He's somebody that I met. He's on here right now, and he's commenting, and I appreciate you watching my brother, Mr. Night Wolf. Now let's get into Rome, man. He came out last week with another rate hike, and then the stock markets immediately went crazy. I heard a lot of people saying that he's trying to collapse the market. What say you, Eddie Chinea?
I don't know that he's trying to collapse the market, man. I think those guys had a tough job. They're going to piss somebody off regardless. You know what I mean? Somebody's going to be upset if they stop and investors are happy. Markets start to come back, and everybody's making all this money again, and then inflation never gets under control. Find yourself like some of the other countries that it costs you $1 million to get a Coke out of a vending machine, right? Because it gets so bad. So I don't think he's trying to collapse the market, man. I would think that now are they doing the best job? I'm no economist, and I'd like to give people the benefit of the doubt, but there are people out there saying, "Hey, man, no, they're botching this whole system. I mean, they're really botching the job that they're doing." But I mean, inflation has come under control. I think that 25-point basis hike was just kind of a, let's say one for the road before they pause. I think within the market, it was already priced in because there hasn't been a ton of fluctuation in the market. I mean, after you spoke,
right?
So I think investors, institutional retail investors, were kind of already anticipating a quarter-point hike. You know what I mean? So it wasn't like they came out and said, "Hey, half a point, another 3/4 of a point." I think that some of it is already priced in.
That makes sense.
I don't think works that they're trying to collapse the financial system and the markets or anything like that.
Yeah, and I don't think he's trying to crash the market per se, but like people have just because he's trying to stave off inflation doesn't mean he's doing it correctly. And I don't know if he is or he isn't, right, but he could be trying to do the right thing, and it could be causing an adverse effect. But I know once he spoke and talked, I know I had some dividends that started going haywire, and I had well, AMD I believe did a little dip, but it might have been because of the you know of their what they came out as far as their uh, uh, shit. They just had their what do you call that, man? AMD just had, yeah,
Yesterday, their earnings.
their earnings. Yes, my bad. I had a brain fart right there. AMD had earnings, and that may have coincided with the rate hike and had them going down a little bit. But you know,
I'll tell you,
but
man,
yeah,
it was down later on after he spoke that day because I was tracking, and I do it with one of my classes where I tell the kids, all right, man, pull up the chart and let's watch on the 1 minute chart as he's talking. I'm watching how the market fluctuates right and forth.
yeah,
And I mean, I didn't think there was that big of a. There definitely wasn't that big of a drop off that day. I mean, the next day, fell. I'm just talking about the S&P 500 there. But
yeah,
right after that, for the next 2 days, I mean, it rallied. You know what I mean? So
yeah, yeah.
Friday, right? Thursday, Wednesday he spoke, right? Thursday dropped. I mean,
Uh-huh.
down a little bit. Come Friday came roaring back almost 2% back on Friday,
Yeah,
and then Monday
yeah.
was fairly even.
Okay.
And then down today, but I don't think that Romy Rome is trying to cripple the system now. Doing the job that he's doing may have, like you said, that adverse effect where it might be doing more harm than he is good at this point. But that's why I think these pauses are going to be. I think next time they meet, there's going to be a pause in place.
Yeah, already. All right, so let's get into trading versus investing, my brother.
Yeah, man. So there's a difference, man. There really is. There's a huge difference between when you're talking about being a trader and being an investor. So again, the kid that I was talking about that was looking at the charts me today, coach, I want to trade. I said, well, what are you looking to do? He's like, well, I want to set myself up long term. I said, well, then you need to look at investing. All right. So the biggest difference between trading and investing is your timeline. All right. So with an investment, you're probably holding that asset for years, right? It could be decades that you're holding on to it. Whereas trading, you might buy 3 or 4 different ones in a day, in a week, in a month, and give it because you're looking to
Yeah,
take profit, right?
yeah,
So there's definitely a difference. And I try to explain to kids, that what I want you guys to learn is to invest. Yes, trading is fun. Swing trading, day trading, all that stuff. Yes, you can make money there. Also, I can anything away from that.
uh-huh,
If
uh-huh.
you're looking for the long term,
Right,
look to be investing in companies and not
right.
trading them just to make money. So
Yeah, and most of the kids that talk to me about stocks, they don't want to talk about investing. They want to talk about trading. Mr. Jackson, Coach Jackson, how do you trade stocks? I want to trade stocks.
yeah, it's true, man. I had a dad. We were at a benefit for a high school kid, and I met student dads, and he's like, man, he came home all excited about learning how to trade and everything. I said, whoa, whoa, whoa. I said, I don't teach him how to trade. I said, I teach
Yeah,
him about investing.
yeah.
So,
If
I
they
mean,
only knew that
valuation, right?
investing, yeah,
Yeah.
you
So
can,
again, there's nothing against trading at all.
right, and you can, and what I tell them, because trading is a lot more to it. It's a lot more nuanced than investing. So I tell them that while you're young, investing is the best option as you're learning all the nuances of trading, how to become a really good trader. Like that takes time,
Yeah, I tell you
because
this,
it takes
man,
time to be a good investor.
it takes
So
it takes time for either one. There are nuances with both ways of looking at it. Like I said, I advise clients that if you're looking for long term, right, generational wealth building, you need to learn to invest, right, and
yeah,
not be a trader. Again, with that, you got to understand valuation and what companies are you going to invest in, so that you're not just throwing your money whatever the talking heads are saying on TV. You know what I mean? So do your due
right,
diligence. And the
right,
same applies when you're talking about trading. If you're going to be a trader, thing, due diligence, man, and go through and understand what's going on in the short term. Like even traders, if you're looking at swing trading, you can still look at valuations and all that stuff. It's very hard to stock, man. There aren't very many out there that can do it. And the ones that are successful is because they do the back end work of, valuing these companies and saying,
Right.
is it worth my money? And even if it's for the next month, next, 3 months. But again, when you see things like, guys trading options and, the GameStop overnight riches and things like that, kids want that quick money.
They want it big. They want it quick.
Yeah. I'm never going to be 40. You know what I mean? That's a long way, man. I'm trying to make this money now. And I'm like, what you want is when you turn 42, be my age, that, you know what? You've done such a job doing it so young and sticking to a plan that you may not have to work when you're 45 years old.
Yeah. Yeah.
So, not that you can't do it with trading. I mean, you can get very good at trading and understanding, the different, the indicators on the technical analysis, right? Trading strategy you have. And sometimes it works. Actually, I have trend spy that I use. There's bots you can create based on trading strategies. Yeah. And, some of that stuff works. I've been back testing my, 2 strategies now on Tesla and on Apple, and for those 2 particular stocks, I didn't test on the entire S&P 500 or anything, but just seeing what works and back test and test it. And when I'm done back testing, I'm going to test it again and get as much data as I can to see, hey, over the last 10 years based on this trading strategy, how would it have done? And it could be on the 1 minute chart. On the 1 hour chart, on the 15-minute chart. It just depends on your flavor. You know what I mean? Some people like to scalp the 1 minute chart and take those 2-3 cents. You know what I mean? But 2-3 cents on a couple $1,000 or a couple thousand shares, it can make a difference.
A big difference, a huge difference. So I do the same thing, man. I feel like investing is the way to go because I'm a patient man, and I feel like over the long term, that'll do me justice. But these young guys, if you want to trade, there's definitely ways to learn how to do that and become a good trader. Trading versus investing.
And one of the biggest difference between the two, when we talk about is that, trading, we want to jump in and out of stocks, right? It could be weeks, days, right? Sometimes, like I said, scalping could be even minutes, right? And they're looking at these short-term profits, whereas investors are looking at long-term outlook, right? So they're thinking in terms of years, right? So they're going to hold on to some stocks, through some market volatility if it's companies that, that they believe in, solid companies. And again, when you're talking about the investing side, you're looking a lot more, probably more fundamental analysis as opposed to the traders that, technical analysis, right? Yeah. Traders worry about what direction the stock move next and, how they can profit for that move, whether it's up or down, because there's ways to make money, on either side of the transaction. Whereas investors like, I'm going to invest in, say Johnson & Johnson or, Altria or, Apple, something like that. And I'm just going to share and dip some of them, I'm going to continue to buy because it's, solid companies are going to be around for a long time. And they've had a proven, track record of returns.
Yeah.
All right. So investors are going to study, looking for value, looking for growth, right? Buy and hold. Sometimes traders are going to take advantage of those small mispricings in the market, right? So you find, a little arbitrage or something like that, you can take advantage of. And there's nothing wrong with that. I'm not dogging traders, day traders at all. I think the ones that are really good at it, man, they have a very, very unique gift because that's not easy. It is. You got to be vigilant, man. And
and I know
stick to it.
I know some good ones. And we might need to get one of them on here at some point and talk to them about trading and let people see all the ins and outs about that. And we need to go more in depth in investing as well. You know what I'm saying? Like our top or 1 through 10 of investing and show people, how we do it, how it can be done, and then they can figure out how they want to do it. But
for sure. One thing to know though, with the trading, man, trying to trade wisely, right? For one, going with your eyes open. Understand that, the long-term average is like 9-10% of the market, right? Mm-hmm. And it's tough for even professional traders to be able to beat that in their returns now. Short term, I mean, just understand. I mean, it could be percent you make, it could be 37%. You got to hold to something that was really, really good. But understand you got short term, long term capital gains, and that stuff plays into your taxes also. You hit for 37%, pull that money out, it's a realized gain, and now you're saving money.
Keep your expectations in check, and realize that all those gains aren't yours.
Yeah, Uncle Sam wants it. Joey B wants his money too.
Uncle Sam, absolutely.
Yeah, so, the short-term capital gains, long-term capital. Like I was, listening to again another Warren Buffett book. I'm a big believer in how he does things. And that dude said that when he bought the Washington Post, I think he had like $11 million for it. Whatever he bought in the 70s or something like that, and said that as of the book being written, it was like 2008, he still hadn't paid a single dollar of tax on any of those shares because he hadn't sold them.
Oh, really?
Yeah. Does
that make crazy? Sense? Yeah.
Which again, allows him to, for those returns, just continue compounding.
Yeah.
You know what I mean?
Yep.
It's all tied together, man. And again, Warren Buffett is an investor. He's not a trader. But again, understanding holding on to that thing. Hey, you know what? I'm able to defer taxes for as long as I don't sell.
So you pay those. Yeah. I mean, you don't sell until you're ready to pay taxes.
Yeah. I mean, it's one of those realized loss, realized time. You know what I mean? It's advantageous tax-wise to say, hey, you know what? I need to go ahead and take this loss, go ahead and drop this, take this tax loss harvesting and try to apply it to my income. Reasons to be able to want to sell.
Yeah.
But you ain't gonna pay any taxes until you realize that gain. And with
absolutely.
Long term versus trading. You know what I mean? Which is you don't pay them short term capital gains.
Oh yeah. But I mean, that means you're making money. So
my deal. I mean, again, I will not ever dog it. Again, when AMC and GameStop and stuff was going on, I had plenty of short-term capital gains because I was in there. I was trading.
Already.
Look, I'm with it. Just understand, for people watching don't know that stuff that, you buy and you sell and you buy and you sell, and that there's going to be, there's going to be money there. It's going to be owed.
Is there?
Once it's cut.
So let's talk about compounded returns, my brother.
So like we were just saying with Buffett, think about like I said, he hadn't sold any of that stock, right?
Yeah.
So those returns get compounded. So I mean, difference between simple interest, compound interest is simple interest. They only pay you interest on the right. So if you put $10,000 and the investment makes 10%, we'll just say.
Yeah.
Well, now it's at 11,000, right? Well, next year earns another 10%. They're only paying you 10% on that 10,000 that you originally invested. Whereas your compound interest, a little bit different now. So you invest, we'll just say $10,000 into, XYZ company, right? And it returns, we'll just say 6%, right? So now you're at $10,600 that you made. Okay. Well, now next year earns another 6%. Well, now it's 6% on that 10,600 as opposed to just on 10,000. So you go from 10,006 plus another 6%. Now it's 11,002. All right, so you start a compound. So if you never sell, because it's very easy to say, hey, you know what? I'm going to buy these shares. I've made $600 in profit. I'm going to sell just enough shares so I can take that profit.
Right.
So you're leaving that same 10,000 in there. So next year earns another 6%. Well, it's 6% on that 10,000. Whereas if you didn't sell and take the $600 profit out, now that 6% is on those $10,006, $10,600.
Right.
Being able to compound those earnings, right, and just leaving it in there, man, over time, it really starts to take off. As long as you stay diligent and continue to contribute.
Absolutely, and compound interest is a beautiful thing. And I think what was that was a little something where what would you rather have, a penny compounded over 1 penny a day for a month, or
doubled every day for a month, or you want $3 million? $3 million now, or I'll give you 1 penny every day for 30 days.
Yeah,
I think it was like $5 million. I think is what it is. If you
and before you understand compound interest, you definitely want the $1 million, whatever it was. But then once you do the math, You
Correct.
see the beauty in compound interest, and that's what that story was about, and that's what compounded returns is about as well, man. And ever since I heard that story, I've been trying to get into stocks. I said, well, I need my money to compound. No, first thing I used to want my bank accounts. I used to think my bank accounts was compounded interest. That's just regular old interest, not compound interest at all.
Yeah, and to understand that they say, oh yeah, we're paying 4.5%. That ain't 4.5% a month.
I know. On top of
yeah.
Yep.
But one of the biggest deals, man, is just understanding how the compound works, man. Again, you invest $10,000 in, whatever trucking company, Corey's truck company, right? So the first year goes up 10%. Well, that's great. Don't sell any shares, and now your shares are worth, however much. $10,000, $11,000 because they earn 10%. Well, you go another year not selling anything, and it earns, we'll just say, another 10%. Well, now you're at 12,100 as opposed to being at 10,000, you made 1,000, 10,000, you take 1,000 out. So compounding interest works, man. And then again, you start adding in things like dividends, and now you really have a chance to make some money to really compound stuff and try to earn grow your nest egg exponentially. You know what I mean? I mean, it really does. It starts to grow and take off.
That's what stocks that pay dividends do for you. You're not only gaining compound interest, but you're also compounding the dividend that you receive. If you reinvest it. Speaking of reinvesting dividends, my brother, let's talk about something that you can do, and it's called a DRIP, or a dividend reinvestment program that a lot of brokerages offer. And what's up with that, man? How does that work?
A lot of times, it's very easy to turn on, man. If you invest in companies that pay a dividend, it's really easy to go on sometimes to your brokerage, and there's usually just a button that you click that you want to reinvest the dividends. So instead of them, again, you have 100 shares of whatever company, and they pay you 25 cents share quarterly. We'll just say.
Mm-hmm.
So instead of them mailing you that $25 check, they take that $25 and they just buy more shares. Right. So let's just say the shares are going for $50. Well then you can take that $25 and you'll get a half a share. Right. Yeah. So now it just grew. They just add another $25 into your account. Yeah. And now let's just say again, it grows 10%. Well, now you have 10% times even more shares because you've invested those dividends, which again, you load up in a portfolio with enough dividend paying stocks, man. I read an article where I was talking about when he was 45, he had more than enough dividend income that he didn't have to work full time anymore. Yeah. He got a part-time job, and he started to do some of the things that he loved because, again, every 3 months you're getting, $3,000, excuse me, $3,000 a month in dividends. I mean, $3,000 every 3 months works out to a grand a month. Yep. That pays some bills, you know what I mean?
And if you're a dividend investor, that's generally where you want to head to be able to get dividends on a monthly basis that can take care of whatever you want to take care of, whether it's bills or vacations or whatever.
Vacation money, spend them, whatever you want, whatever you need it for. I mean, it's yours, it's there. And if you don't need it, you can't be working, just continue to invest it. Because like I said, they're going to pay you that dividend based on however many shares you have. So if I started when I was, 10 years old and I started investing in, 3M, we'll just say, all right, it's been paying so much in dividend, man. I've been purchasing, dividend reinvestment program has been purchasing fractional shares, and it's just been continuing to grow and continue to grow. So now you look at somebody, might be 50 years old, Joker might have 3,000 3M shares, and now that dividend's paying $6 a year.
Yeah, exactly.
3,000 shares, that's 18 grand a year, man. You know what I mean?
Right.
$1,500 a month, that works out to get with when you break it down from the quarterly, what should be making quarterly.
Yeah. So what's the I guess the benefits, pros and cons of DRIP? Give me I guess
the pros. I mean, again, the pros is that you have a company that's paying you for investing in their company. You know what I mean? So they're basically giving you money. Think like an employer match, in a 401k or something like that, some kind of employer sponsored plan.
Yeah.
Going to match it. They're going to reward you for investing in their company.
Right.
And I mean, we talk about dividends a bunch between kings and aristocrats and the list and all that stuff, but just if every year you got an extra, 2 shares, well, over the course of 10 years, that's an extra 20 shares that you've now got because of reinvesting your dividends.
Not to mention of those 20 shares, whatever the price is of those 20 shares, that's all extra for you. Yeah,
correct. I was looking at the Berkshire Hathaway portfolio tracker.
Yeah,
and looking at something like who was it? I think Bank of America is what it was. Probably a bad example talking about banks and stuff right now. Their dividend right now, they pay 22 cents. So 88 cents a year is what they pay in dividends.
Yep.
Right? Yep. So you think about somebody like Warren Buffett that owns 1,032,852,006 shares. I'm going to do the math for you right now. 852. Times, we'll just say 88 cents. You know what? I'll do it by quarterly. This man gets a check.
That's roughly $1.
$227 million every 3 months in dividends.
Wow. From that one company.
Just in that one company. Now, he also has 1 billion shares. You know what I'm saying?
Yeah.
But nonetheless, why invest in? He believes in Bank of America, and they pay a decent dividend. Dude's making almost $1 billion a year just in dividends alone. We're talking about $908 million based on the number of shares times 88 cents in a year.
Yep.
So, and he was due. I'm just going to keep adding to my portfolio. And part of that tracker, man, I think that's his second largest holding. No, I'm lying to you. It's not his second largest holding. 13%, I believe, is what he owns of Bank of America.
Oh,
13% of the portfolio is
he has 1 billion shares, and it's only 13% of his total portfolio.
Oh, sorry, excuse me. He's got 13% stake of Bank of America. Portfolio.
Okay.
Bank of America
complies
like
it. Yeah.
It is his second largest percentage of his portfolio is Bank of America, because he's got $157 billion invested in Apple.
That's
right. He owns 5.8% of Apple.
So he's a minority owner in Apple. Yeah.
Think about it. Coca-Cola, same deal. I was listening to, matter of fact, I don't know if you, I think his name's Erik Warren. He's a motivational speaker. And he was talking about Warren Buffett one time, and he said, why invest in Coca-Cola? Why Coca-Cola? So that Warren Buffett told him there are like 1.89 million glasses, 8-ounce glasses of Coca-Cola that are sold every day.
Yeah.
He said, you don't have to do anything. They can buy it anyway. People will buy Coca-Cola anyway. I don't know what a campaign. I don't have to, change the recipe. People are going to buy Coca-Cola, and because people are going to buy it, he's going to own Coca-Cola because it's not going anywhere. It's got a distinguished, a durable competitive advantage. They're the only ones with that recipe. And what do they spend their money on?
Yeah.
Aside from production, all that stuff, and marketing campaigns. That's it.
Right. Their marketing.
Research and development. You know what I mean?
Yeah.
It's so they've got a durable competitive advantage where people are gonna buy Coca-Cola. Warren Buffett believes in it. And, and I know we're off tangent now. We're talking about dividends and everything, but he's a big dividend.
So what's a con of drip?
I guess you're just not realizing that money, not getting that money. That check from them. You know what I mean? I think also what could be a con, and just kind of brainstorming here, spitballing this, if you've got so many shares and you're not paying that, then you feel almost like locked into a company.
Yeah.
You know what I'm saying? That because they pay a dividend, that will, hopefully, if it's an 8% dividend yield, we'll just say, you're hoping that if somebody takes a dump this year and, it just drops 15%, well, it's down 7% because of but then you possibly find yourself married to a stock that you really don't want to because of the dividend.
Right.
I could think that would be a con just off the top of my head.
Okay.
Let's see here. tax headaches. You know what I mean? It could be just, I mean, but again, if you got an account that does all your stuff, man, you know, I wouldn't worry about that. I mean, there are some hassles, you know, that I'm sure come with dividend investment stuff, but I just look at it from a growth perspective.
Yeah.
If I take the cash, what am I going to do with that 25? Do I really need that $25 right now? You with me? With the example I gave.
Mm-hmm.
Right, so I have 100 shares. They pay 25 cents a share.
Right.
Every 3 months, you're going to mail me a check for $25. I'm probably going to blow that, you know, on something to eat. You know what I mean?
Yeah.
Or guess what? I really don't need that $25. Let it continue to work for me. And that, you know, foregoing that $25 check in 1 year is another bucks.
Yeah.
You do that over, you know, 10 years, you know, there's another 1,000. Doesn't sound like much, but when you talk about compounded growth,
right,
it's different.
And that's the beauty of it. Absolutely.
And not to say that you have to like you do it forever. You know what I mean? Once you get close to retirement, or you know what I mean, you just say, hey, I need the income, I want it now. And if you don't need it, just keep reinvesting them.
Absolutely.
But I think one of the cons, but one of the deals is, you know, as you get closer to retirement, is, you know, when you need to stop reinvesting those dividends, you know what I mean? Because again, it provides money, you know what I mean? If you have enough of a dividend portfolio that, you know, provides, you know, again, money, you know, income that you'll need, you know what I mean, month to month.
Yeah. Yeah.
So
already. Good deal, man. It's a good show, man. We had a lot of good things to talk about. Like I said, man, we might be talking about another bank collapse by our next show.
Hope not, man.
The way things are going, hopefully not, because I don't want people to you know feel any type of way about losing their money. You know what I'm saying?
Yeah, you know what I mean. Like it just if you're a conspiracy theorist, then it's probably, you know what I mean. It's like swaying you or anything like that. But I would just say that unless you are in danger, you hear rumblings of, you know, a bank. I think that the major banks right now are where it's at. Like I said, you know, Capital One's, your JP Morgan Chase, right, Citi. You know,
Yeah.
But again, I thought Lehman Brothers was going to go out, you know, under either. You know
so this is what, yeah. So I'm gonna leave people with a thought, man. If you're looking to invest, and it might be this is probably people with a little bit of change. What do you think about? I think that one of the, you know, a really good investment right now is in sports teams, man. And
I mean, actually, you know, some of these publicly traded ones, man.
Yeah, I feel like they're just blowing up, you know, as far as how much they're worth and how much they're being bought and sold for, you know. And so
billions of dollars.
Somebody's watching this thing that has 10 million, 20 million, that wants that money to turn over maybe the next 5, 10, 20 years, 3, 4 times. I think a sports team would be a really good investment, whether it's NHL, NBA, NFL, or MLB. And I would even put Major League Soccer in there, man. You know, I mean, they're, you know, or maybe some soccer teams. But
well, you know, you can invest in Manchester.
Yeah,
they're publicly traded.
Manchester U is publicly traded. Yeah.
I mean, I think some of that, you know, what they worry about there is you start opening it up. Somebody come and try to buy, you know, majority stake in the company or things like that. That those owners start feeling like they're, you know, they're.
Yeah, and I mean, most
people have a say. You know what I mean? Like what happens on draft night? Like, yo, I'm a shareholder. Right. I don't get to vote on who we draft.
So I guess I'm not, because most of these are private companies. So I'm just talking, if you have the money and you want an investment, you've got to deal with the owner and make sure you're the type of person the owner wants to take your money and that way. But yeah, most of these companies aren't publicly traded.
Yeah, but, you know, talking about somebody taking your money, man. That was one of the biggest deals that Bernie made. Not to compare these guys to Bernie Madoff, but Madoff, you know, that, you know, people start asking questions before, you know, finally turn themselves in. Start asking questions like, you know, just, you know what, I don't want to take your money. Take your money, but once you take it out, it's gone, and you know, you're not. I'm not allowing you to come back in, and almost, you know, presenting it as though there's a sense of exclusivity with it. You know what I mean?
Exactly.
Trying to take somebody's money, like, oh, well, you know, will they take your money? Will that owner allow you to invest? You know what I mean?
that makes you want to invest that much more. You know,
That's what they say, man.
yeah.
That's what I need to do with mine. Make it more exclusive. My A1 capital.
Yeah.
I never help people, man. I'm here to help people make money and show people that there is a way, and you don't have to have millions or be, the Wall Street pedigree, the Harvard, background, all that stuff. That everyday Joes like you and me and everybody else out there, all of, the people that watch and support us, that you can do it as well. You know what I mean?
Yeah. So, yeah. Appreciate your Night Wolf, man. My man.
Yeah, for real, man. Night Wolf, I sure appreciate you tuning in, dude.
Yeah. Been watching some
tell a friend, right?
Absolutely, man. Yeah. Let your people know, Night Wolf. But appreciate you, bro.
What's that logo from, man? I see you got a little logo up there.
You talking about me?
No, I was looking at on the YouTube channel, looking at the chat. So he had a little logo there. So I don't know if he was a coach also.
Oh, Night Wolf.
Mm-hmm.
Oh man.
Nonetheless, shout out to Night Wolf, man. We appreciate you tuning in, dude.
Yeah, appreciate it, big dog. Hey man, we're gonna drop some knowledge on some books next time, man. You gotta remind me. We gotta give the people some literature.
Yeah. You can invest. I'll tell you like this, man. You're talking about trade investing. You can invest, man. Take some time, invest in yourself too, man. And pick up a book, read an article or two, man. I'm taking a private equity course right now, again, to try to get going, in that direction as well, man. Just to open up more doors and avenues, especially when I open up the hedge fund. So private equity, something I'm trying to do. So if I'm able to do it with a kid and 2 kids, I'm saying a wife and coaching and teaching, just like you. I mean, it's investing in yourself also. I'm saying invest in yourselves and and it's something you like, put the time in for it, and take the time to take care of you.
Yeah, there's a lot that you could do to invest in yourself. You know what I'm saying? Take courses, read books, just work to become a better you, man.
Yeah, for sure. And if that means going to get, a haircut, ladies, getting your hair done, your nails done, whatever,
Yeah.
That's for you, man. Right? Pay yourself first. Take care of yourself, and
absolutely.
Be surprised that you feel better about yourself, and you're a lot happier because you got to do some of the things you enjoy. That you're more willing to do some of the things you don't want to have to do. You know what I mean? So
absolutely.
Yourself,
that's right. Appreciate you guys for tuning in. This is Market Watch. Me and Eddie, we are Market Watch, and this we love coming on here doing this show for you guys. And each week it's only going to get better and better. It's only been 5 months for us, man. Has it even been 6 months?
I don't know. You know what I mean?
It's November, so it may be right at 6 months, man.
Give or take. I mean, like I said, doing it, man. Information, right? It's all entertainment purposes. You know what I mean? But to give you guys some information, and drop some of the bits of knowledge that we have, man, and just share things that maybe you might not have thought of.
Yeah.
And anything you can take, and please, take and apply it. We appreciate the sport, man. And unlike, is watching people, something that you and I both enjoy doing, talking, investing, and putting the information out, and watching, people that support us, man. We appreciate that.
Right. So we want you guys to like the channel, show your support, but most importantly, man, comment. Talk to us. We love going back and forth with you guys. We want to know what y'all think, ideas that y'all might have for shows, stuff like that, man. Just hit us up. You can reach Eddie on his EightOne Capital Facebook page. You have Instagram also, Eddie?
I mean, I have Instagram, but it was from a graphics business that I used to have, man. So I'm not on IG, man. I'm really not.
Okay.
I mean, I'm on Twitter because I'm an old head. It tells me that you're old if you're on Twitter now, but that comes from being a coach forever. On Facebook, man. And again, you can always jump on the website, man. Find the contact information, get in touch. I'd love to talk to people. Even if it's just
Capital, EightOne Capital LLC on Facebook. Erik T Jackson TV on Instagram. Erik T Jackson on Facebook and Twitter, man. Hit us up, interact with us, and we love to hear from you. Appreciate you, Eddie.
Appreciate it, man. You guys have a good night. Appreciate it. Night Wolf, shout out to you again, man. We appreciate the support, brother.
Yes, sir.
Have a good night, man.
All right, baby. Later.
Bye now.